part 4 of About the S&P Eminis. The S&P Eminis trade electronically. They are a first come, first serve through the CME exchange. So there's no front running, which is nobody could come in and put their order before your order, okay? With stocks, high frequency trading, they're able to see your order coming down, okay? And what they'll do is they'll actually buy the stock right before you turn around and sell it to you for a couple tenths of a penny more, and they make that little spread. Okay, that's pretty much what high frequency trading is, and that's what front running is. Okay, with the futures market, you cannot front run on the Emini S&P futures. So S&P 500 SPX. That is the index of the S&P Emini future contracts, right? So whenever you hear, hey, the S&P was up 25 points today, the index, okay? The S&P Emini futures track what the SPX does, okay? The SPX only trades in the pit. They're the big future contracts. You cannot trade them on your trading platform. They're more for the institution trading, okay, because it's a lot bigger contract size than what the E-mini future contracts are. But they do trade options, okay? So SPX actually does trade options, so you are able to trade the options on it, but they are cash settled at expiration. So kind of the pecking order, right? It goes the SPX, which is the index, is tracked by, right below it is the E-mini S&P futures. Those track whatever the SPX does. Then you have the SPY, which is the stock ETF, which tracks what the E-mini S&P futures do. Okay, they'll all go up together, they all go down. They track each other very literally tick for tick. There's usually never going to be where one's up and one's down. They just all track identical to each other. You could trade the options on the SPX, but not the index. Okay, I just kind of went over that. Again, you could trade options and the future contracts on the E-mini futures and also the SPY, but SPX, the index itself, you cannot trade the future contracts on it. They do not have them. All you could trade as a retail trader is the options on the SPX. And then traders will place trades on the E-minis based off of the SPX. What I mean by that is the SPX is a cash market, okay? So that the E-mini futures have time decay in them, okay? So it's kind of called the cost to carry. Okay, so currently, as we speak, the E-mini S&P futures are 1953. Okay, but the SPX cash index might be at 1956. So there's $3 worth of cost, okay, carrying cost. At expiration, the third Friday of every 3 months, right? March, June, September, December. Those numbers are going to be identical. Okay, so the E-mini future and also the SPX cash index is going to be identical. Then what happens is at the so let's say we're coming up into September, okay? Our next contract will be the December contracts. The minute we start to trade those, we're going to have about a $7 to $8 cost to carry. Okay, so that means if I want to trade the E-minis, okay, and I want to see what they are versus the SPX, well, the E-minis are at, we'll say 1950, right? The SPX index would be 1957 or 1958. So again, it's cost to carry. And we'll go over this later on when I show you the charts and show you how that difference works. So, but that's it for part 4. Next will be, the next video will be part 5 of about the S&P E-minis.